In this video, we're going to calculate basic earnings per share for a company with simple capital structure. Cullenber Industries has the following information. Net income for the year was $2,670,000. They had $5,500,000 of 8% preferred stock outstanding. It's not convertible, so we don't need to worry about any dilution effects. They've got 822,000 shares of common stock outstanding. They issued common stock on May 1st. They acquired treasury shares on August 1st. And they had a 2-for-1 stock split on November 1st. The first thing we have to keep in mind with respect to stock splits or stock dividends is we assume they're effective at the first of the year. So when we calculate our weighted average shares outstanding, we'll multiply our shares by 2 to show that effect for the stock split at the beginning of the year. Let's go ahead and take a look at how we would calculate our weighted average shares outstanding using an incremental approach. Our beginning balance is the 822,000 shares that were outstanding on January 1. They've been outstanding for the entire year. The effect of the stock split is a 2-for-1 stock split, so we'll multiply the 822 by 1 by 2 to get our weighted average shares outstanding with respect to our beginning balance of 1,644,000 shares outstanding. Next thing, let's consider the shares that are issued on May 1st. We've issued 302,400 shares on May 1st. These are outstanding 8 months from May 1 to December 1, or 2/3 of the year. For our weighted average shares outstanding, we'll take the 302, multiply it by 2/3, multiply it by 2, to get 403,200 shares outstanding. Finally, we need to consider the treasury shares we reacquired on August 1st. We reacquired 162,000 shares. This is outstanding for 5/12 of the year. There are 5 months between August 1 and December 31st. So in our weighted average shares calculation, we'll take the minus 162,000 shares times 5/12 times 2. We add up the weighted average shares, and we get a total of 1,912,200 shares outstanding. We're now going to consider the same calculations using a running total or a running balance calculation the way the textbook presents it. We again begin with the shares outstanding on January 1, and we had 822,000 shares outstanding. Again, we're going to need to multiply all of our calculations for our 2-for-1 stock split. These shares were outstanding for basically 1/3 of a year, or 4 out of 12 months. 4 out of 12 months, because new shares were issued on May 1st. Next, we're going to calculate our weighted shares. We'll take the 822, multiply it by 1/3, multiply it by 2, and we get 548,000 shares outstanding. In our calculation, it's showing here as 4/12, which is 1/3 of the year. Next, we're going to consider the shares that were issued on May 1st. We had 302,400 shares issued on May 1st. This brings us up to a total of 1,124,400 shares. These shares are outstanding in total until we reacquire shares on August 1st. So they've been outstanding 3 months, or 1/4 of a year. In terms of our weighted average shares calculation, we'll take the 1,124,000 shares that are outstanding 1/4 of the year, or 3 out of 12 months, and we'll multiply it by 2 to adjust for the 2-for-1 stock split. Finally, on August 1st, we reacquire 162,000 shares. So our weighted average, or our shares outstanding effective August 1, is the 962,400 shares. And these, of course, are outstanding for 5 months, from August 1st to December 31st. in terms of our weighted average shares calculation then, we'll take those 962,400 shares. They were outstanding again for 5 months or 5/12 of the year. So in terms of our weighted average shares calculation, we'll take our 962,400, multiply it by 5/12, and multiply it by 2 for our 2-for-1 stock split. That gives us the exact same 1,912,200 shares outstanding. Finally, we calculate our basic earnings per share. We take our net income, which was $2,670,000, subtract off our $440,000 in preferred stock dividends, and again, that was our $5,500,000 times the 8% preferred dividend. Then we take that and divide it by the 1,912,200 shares outstanding to get $1.166 per share for our basic earnings per share calculation.